Hey, I'm Scott Cole from whentobuyandSellStocks.com, and been a while since I've given my weekly market commentary, so I wanted to come at you with that on this Sunday, April 29th. We had a little bit of a very minor correction, and the interesting thing is in the Dow Industrials, it looked like it might be setting up for a head and shoulders top, but I've pointed out in the past that the head and shoulders pattern can also be viewed as a nice continuation pattern as well if it breaks the right shoulder to the upside. So here's your left shoulder here, here's your head, your neckline, top of the right shoulder, and we never came back down to the neckline again. We traded lower from the top of the right shoulder for a few days, and then we broke out above it. And this is in the face of a lot of mixed economic news here in the U.S. over the last couple of weeks that suggests maybe there's a slowdown underway, and also the ongoing issues in Europe. We're in the earnings season right now for the last couple of weeks, and the earnings reports have been coming in strong. So most investors are focused on the earnings, and they're leading the market to the upside. So this is that chart of the Dow Industrials. I'm going to bring up the S&P. And the S&P had a similar type of a pattern. Actually came closer to the neckline. If you wanted to draw the neckline, it actually broke down through the neckline. So this is actually a more bullish pattern, the fact that we broke through the neckline formed by this low here, this low here. If I wanted to draw a trend line between the two of them, it would have been broken down here, and since then we've broken above the high of the right shoulder. So that's a little bit more bullish. And in all honesty, if we look at a weekly chart of the S&P, it's a much more bullish scenario. So my suggestion for now is that the trend of the market is to the upside. We've probably renewed a short-term uptrend, and we continue to be in an intermediate-term uptrend and a bull market uptrend. So probably not a good idea to take too big of profits in your core stock positions. However, I did want to bring up Apple. That's been the volatile issue in recent days. We traded down from a high of 644 all the way down to 555, and then we had that blockbuster earnings report. It was up about $50 on the day, which was about an 8% move, almost 9%. And it's just drifted downward the last couple days. But overall, that chart pattern, that stock, remains pretty much in an uptrend. So we basically came down to support at the 13-week moving average and bounced quickly off of it. I suspect we'll have a period of consolidation here, maybe for the next couple of weeks before it tests the 644 high, and then it might head higher from there. But that was the bellwether. It was struggling a bit, and the fact that the stock market was still able to continue to shrug that off and then start heading higher again suggests that this market has some legs as we enter into a seasonally somewhat weak period. So just keep in mind that the market has a tendency to begin to turn lower when we get true selling days, when the overall averages, all the major averages, are down at least 1% on any trading day. But in recent times, those days have been followed within a couple days by similar days to the upside. So it's probably going to take more than just one true selling day to really turn this market on its head. Nice thing for traders is that the volatility has returned, and so there are many more opportunities for simply day trading some of these indices if you want to do that. That's all I got for now, and we'll see you down the road in some more videos.